All right, hey there, everyone. This next video in the boot camp tutorial section here is going to be discussing trade planning, construction, and maintenance. And I will have a whole entire section independently of this that's dedicated specifically just to trade planning, journaling, back testing, just kind of the ongoing thought process of how you want to manage some of these option trades and option positions. But as we're starting to wrap this up here in month 11 of this 12 months from sim to live trading, I think it's really important to spend a few minutes talking about this here. And the reason why I think it's important is because when you start having a trade, let's just say in the Russell, for example, all right, I've been using this as the primary vehicle. I continue to use it. I'm very familiar with it. I trade it. I like it. It's got good execution. It's got good fills. Slippage is very minimal. Spreads are relatively tight. And you can trade it with, medium to smaller size accounts and still do pretty well. So that's why I like to kind of stay in this one. But let's just say that we're just looking at this year right here, and you open up a trade on this day right here. Let's just say that we open up a trade on one of the larger down days right here, okay, this day, and let's just say that we open it at the bottom, and we allocated, I don't know, say $5,000 to a trade, and we identified adjustment areas of where we were going to either take profits or stop out or add new capital. And then we come up here, and that happens, and we have to make an adjustment. And then it comes back down here, and we have to make another adjustment. If you're not keeping track of that, how in the world are you going to be able to go back in time and rebuild a trade to see if you handled it as good as possible? And the reason why I think that is incredibly important is because once I started taking that very seriously, it seemed like maybe it was coincidental, maybe it was I stopped treating this like a hobby and more of like a business, but for whatever reason, it was once I turned that corner and really concentrated on journaling my trades from start to finish, birth to death. And then when it was done, I went back and recapped it and reevaluated how I performed in real time. That was when it seemed like things really started clicking for me. So I'm going to just walk you through what my process is, and I'll show you an example of a trade for March here. One of the butterfly trades that was opened up on January 29th. I decided I'd put $10,000 of capital into it. I currently only had $4,100 at the beginning. I was trying to target $1,000. I was willing to give up $1,000, and I'll walk you through how that progressed. But you'll notice right off the bat, my trade plan identifies the monthly chart. So right off the bat, I'm going to go right here, and you know what? Let me shrink this just a little bit. I'm going to come right here, and I'm going to look at a 5-year monthly chart. That is step one, okay? That is what I do at the very beginning. And I want to look at that time frame because I want to see, obviously looking at 2013, it was a very strong trending year, and you've got 2014 pretty much kind of range bound sideways, big ranging candles, but we opened the year right here at 1160, and we closed the year at 1200. So 40 points higher with just a ton of chop all throughout the year. So I think it's important to, right off the bat, start at the monthly chart. And what I do is I come right here to this little pull down menu, and I take a screenshot, and you'll see that it creates this nice little picture for you. It will have Thinkorswim paper money all over it when you use this method. In the live account, it will not. And so then one workaround is obviously just use, Snagit or, control print screen, and then just, identify the area that you want to screen capture. But I think you absolutely have to get a monthly perspective from the very beginning. Next, I will drill down and I will look at the weekly perspective. I'll see what the weekly is doing. Okay, so if I'm opening a trade here today, I'll notice that we've had 4 weeks of just pretty straight up, momentum, with 1 week of a little bit of bearish outside engulfing bar that's covered the prior 2 weeks, and it's resting right on some prior resistance that now should hold a support. That is incredibly important to know when you're starting a trade. And if you're only looking at the hourly chart, how in the world would you ever be able to identify that? So again, always start from the top down. So I grab a screenshot of the monthly, grab a screenshot of the weekly, and then lastly I'll come into the daily and I will grab a screenshot of that one as well. What I do hope you notice is that there are not a lot of lines and fib levels and Bollinger Bands, and there's not a lot of drawings on here. I try and keep these as clean and as pure as possible and trade just price action, because I think that's really where the strength and the power comes from. And so I want to see what those 3 time frames are doing before I enter a trade. Once I'm in a trade, so let's just say I open a trade here, I'll middle click my button, I'll put an arrow, and I will just come right in here and I will just mark an arrow. All right, that is trade inception right there. At the close of every day, you can take a screenshot in about 2 seconds and you can save that in a doc file. And once you do that, what you'll notice here, okay, here's a monthly chart back from January of 2015, and then here's the weekly chart, and then I'll have the daily chart right down here after the trade was open. So you'll notice right off the bat, here's my trade. I take a screenshot of the trade fills, I take a screenshot of the Analyze tab, and then you'll notice that I have drawings on here. I have predetermined what is my profit zone. So from 1180 to essentially about 1105, this gray rectangular box is the final 10 days before my options expire, and I have predetermined 1120 and 1200 for adjustment levels. So immediately you are able to see, if I come here to settings, come over here to appearance, there it is, time axis. So if I bring this expansion area to just say 50, now I can have a lot more open space on the right hand side of the chart. Well, if I want to identify a rectangle, and let's just say that this is my profit range, and I bring a price level from here to here, and maybe say from here to here. I mean, what did that take? That took like just a couple of seconds to determine where am I at on a price chart to have this become a successful trade. So A, I've identified what is my target range, if you will. B, I've identified where I am going to make adjustments, say at this level or this level. And then C, lastly, I've identified, what do I want to make, what am I willing to lose to do so, and where are my adjustment points. Those 3 elements, you absolutely, I mean, I cannot, I can't scream in all caps, or I can't boldface this or underline it, but just if you'll listen to the tone and the inflection of my voice, this is the most important thing before you open a trade, is this trade plan. You have to know what you're willing to risk, what you want to make, and where you're going to adjust. You may never reach those adjustment levels, and you may just close it up and keep your profits. And also you may have unrealistic expectations. You may be trying to target 50%. Okay, well, you better be prepared to have to make multiple adjustments if those are your assumptions. If I'm willing to risk one to make one, well, okay, I'll be very content making 5 or 8 or 10% a month with those kind of risk to return parameters, because I know that the strike rate on some of these trades is 80 or 90%. And I mean, I'm not even kidding. But if you don't have this trade plan identified and constructed at the beginning, and you go ahead and whip these trades on and the market starts moving around, and you don't respect these adjustment levels, how are you going to be able to go back in time when the trade is over and effectively evaluate yourself to see if you traded as good as you could? All right, so really those three elements are just so important. And once you have a trade loaded and it's going, well, then it's just as simple as just, once a day you go on, you take a screenshot, and it's very boring. It is very routine, and you might not have to make any adjustments, but once you do make an adjustment, then you'll be able to see, okay, right there, 212, I made an adjustment. I sold a butterfly that I purchased and I bought a new butterfly. I'm still keeping my risk profile screenshots. I'm still keeping my price action screenshots. And you'll notice that right here was where the trade started. It breached the adjustment point. I made an adjustment. I have new adjustment points and I have a new profit zone. All right. So then you keep going on that. At the very end, I can evaluate. All right. The trade opened up on January 29th. It closed on February 18th. The most margin I ever deployed was $4,160, and I made $140 of profit. Yeah, it's only 3%, but you know what? It's 3% you did not have prior to this trade starting. So the only way you're going to be able to evaluate that is by taking these screenshots, writing yourself notes, documenting either in a video format or audio format, or journaling with a pencil and a piece of paper. You have to be able to go back in time when it's over and rebuild these trades. Okay, so again, this one's going to be a little short one because I do plan on dedicating a whole entire section to getting a little bit more involved in how I journal, how to back test, how you kind of create these trade plans. And just because this is how I do it, please, you got to find your own way and what works for you. And the easier you can make it for yourself, then the higher the likelihood is that you will actually do it. You can't do something that that's so complicated that you're not even going to stick with it longer than a couple of days. It has to be pretty simple and pretty easy, so that way it just becomes part of your daily habit, part of your daily routine. And when the market is closed, well, you know what? It takes me about, honestly, maybe 30 minutes to grab screenshots of all my trades across all my accounts, make myself little notes, look at, what happened. Did I, need to make an adjustment? Was I late? Was I premature, etc.? And once you establish those routines and habits, then it becomes, it's just basically a habit. All right. So again, thanks much. This will be the one of the final videos, the last video lesson. I want to spend a fair amount of time talking about if you have done as I suggested and recommended and stepped through the prior 11 months, and you are now getting ready to wrap up your year. Your trade planning, you're trading all these different spreads. You've probably pretty much identified which type of trading you like, whether that's directional or non-directional, or what kind of spread is easier for you to kind of grasp and manage. And so this last month here, in month 12, the last video, I'm just going to spend some time talking about how I think you bring all those elements together and you get prepared to go right back to the drawing board at the very beginning and kind of start all over again. But in this experience, it will be no more paper money trading, no more simulated trading, no more pretend money. It'll be live trading, and you'll be able to, put that knowledge that you've gained over the last year to use and, start extracting profits out of the market. Because let's face it, that's the goal, right? To make money, take profits, and preserve your capital. So thanks much, and we'll have one more coming in this sequence of video lessons. All right, bye-bye.